OptionsTender. We have a tutorial here for you. Hope everybody's having a wonderful day. Now, before we get into it, if you like this information, hit the subscribe button. We do tutorials every so often, but we have market updates every single day before the bell, after the bell, and on the weekend. So also hit that like button. It helps us move these algorithms to our advantage and help spread the word and spread the wealth. So let's jump into it. We have a tutorial on swing trading. This is for short-term swings. We're going to use weekly options. So let's jump right into it. Now, I picked pltr because it's just been all over the news, all over FinTwit, and so we're going to use this one for a good example. I'm sure there's a lot of people that have been trading it. Let me pull out my arrow here and ignore this. That's actually an automatic, that's a sell order. I do have an in-out spread on this play right now, but that's not for this video. So if you want that video for in-out spreads, real conservative, walk away type trade, it's just hit the card up above and I'll put it at the end of the video. So for the swing trades, 1 to 2 weeks out, this is a moderate to high risk because if you don't put your stop on, you can lose all of it quick, all of your premium quick. And this is a moderate to high payout. Payout's unlimited. It's only limited to how high your stock's going to go, your option's going to go, and a moderate to high pricing because we are doing a naked call. We're going to do it we're going to consider this deep in the money, and I'll show you how it's done. So this is obviously not an in-out spread. I'm going to change this as we make the video. How about that? The swing checklist. So first we want to have a directional bias. I typically like the MACD. You can find it over in setup here. And this is for Thinkorswim. Just get your regular MACD. Apply that to your chart. And first, you're going to check out on the daily. We're not going to switch over, but you want to make sure that your daily matches your hourly or 30-minute chart. So you want both of the momentums heading to the upside and preferred above the purple line here, which is a zero line, because that means that you're in a bullish trend. So daily and hourly. The hourly, it can be, a lot of people use the 30-minute chart. I use a 65-minute chart, so all the candles are even throughout the trading day. But just make sure you have 2 charts matching. So next, you want to find a setup. I actually gave you 3 examples in this. You say, hey, actually 4. If you want to count the MACD, this would be a bullish crossover. If you have on the daily, if you have a crossover and you're headed to the upside on the MACD, then that's a setup in itself. Also, you have your Elliott wave, 1, 2, 3, 4, 5, which means we're at the end of a wave, and maybe you're just playing the bounce. That's one way. Also, your candle on the daily, this is one candle, but on the 30-minute chart, this would be a cluster of candles. So that's why I wrote both abandoned baby on the daily and an island reversal, because we gapped down here, we gapped down, and we gapped up. So that leaves it wide open, just like an island. Okay, that's a setup for a reversal. And last but not least, some people use your volume nodes or point of control, which is right here. So you have almost like a pad, like a rocket launch pad, some people say. So you came down here, you finished your Elliott wave, or a combination of, and you're breaking off of the wave, and you're stopping here. And I imagine we'll go higher from here. Okay, maybe a test back to this one and head it up. So also, now that we have our stock picked, we have a setup, we are going to go to the trade tab. We have weeklies. As I said, I had a trade in here. We want to play next week. For example, we're going to head over. Now, we want to, now that we know we have weeklies, what strike do we pick? Okay, very important, because We're going to choose an 85 delta. There's an 83 right here. Perfect. That's near 85 because we want to offset theta and vega. If you're not familiar with the Greeks, please look them up. And short term, in other words, theta is time decay and vega is volatility. So if your volatility gets crushed, for example, on this chart, if the volatility is raising and raising, even on the S&P, because if everything is going down, usually volatility goes up. Well, volatility is pricing. It increases the price. As volatility goes up, price increases. So guess what? As the price reverses, it also takes the premium, sucks the premium out of your trade. So how do we guard against it? We pick something deep in the money, which is an 85 approximate delta. Some people even recommend 70. If you're good, if you're picking, you have less room for error, 70 is okay to offset time decay as well. But keep it in the 70 to 85 range. Okay. The more conservative you want to be, the deeper in the money you can be. And then after that, after you choose the item, you want to buy, you want to go to the ask, you want to buy. You don't want to pick that ask price. You want to work the trade. Start at 240. It'll work wonders if you do this. You'll save yourself 10 bucks there. You know, and you're already ahead of yourself. Some people, they just hit that buy button. They'll buy at 250 right away. Well, work the trade. If it doesn't work at 240, work it at 242. Work it at 245 until you complete that trade. Okay. After that, so you work the trade, you executed, and now what? Know when you're wrong. That's very important. We talk about that on OptionsTender often. Know when you're wrong. If this were my situation, I would place my stop back underneath this here, because then that wouldn't be the complete of wave 5. Something else is wrong. Something else is happening. Usually when I'm taking profits, I'm looking to take profits. If we're 1 week out, you don't have much room for error. So you want to take your profits at 50, 55%, 70%, 80%, maybe even 100%. But when you have to have a plan. If you have a 5 wave up, for example, for the wave 1 here, if you do Elliott waves, take that profit, before you get to wave 4. You don't want to wait around for wave 4 to play out. You want 1, 2, and 3. Okay, if you're blindly just headed up to the upside, just take your profit as you go. If you're playing 3 calls, take 2 off right away and let a runner happen. This may run straight up, and in that runner, it would get you some really good profits after that. And if it curls down, take the loss on the runner. But yeah, so work your plan, have your stop loss, know when you're wrong. And that's it, you guys. Very simple. These are called naked calls. These are short-term swings. If you like that in-out spread, real conservative, kind of set it and forget it type play, just check out the video at the end of this. All right. Thanks for joining us here at OptionsTender. Good luck trading.